Welcome back. Hope you're having a good morning. Well, as promised, we have Parag Thakkar, the Senior Fund Manager at Fort Capital, who joins us on the show. Hi, Parag. Good morning. Good to see you in, as always. Parag, I wanted to ask you about the tech space. Later this evening, we'll be getting results that will come in from TCS as well as Tata Elxsi. Now, getting into these results, we've seen some mild buying out there. So there is some optimism that maybe the worst is in the price. How do you approach this sector, and any couple of stocks that you do like?
So we have TCS in our portfolio, about 2 to 3%. We have Infosys, we have Coforge. We have selected names. We have 9 to 10% weight in our overall portfolio in 90 stocks. What I expect is that the valuations have become extremely compelling. So unless you believe that this sector is gone and there is a structural problem in the sector due to this AI-led deflationary revenue degrowth, if you believe that side of the story, then of course there is a problem. But I would say purely from valuation perspective at 20 times for such a quality business which generates 50,000 crore cash flow, I think there should be nothing to lose. And stock has been beaten down completely out of shape. There was some recovery in last 1 or 2 days, but that's okay. So I would say that even a small positive surprise, that like flat revenue, some margin improvement, or some positive commentary on deal wins can trigger a 4 to 5% move also immediately.
You should watch for Infosys, because there are reports that the Anthropic CEO, who's currently in India ahead of their planned opening of the office in early 2026, is going to be meeting Infosys. So he will meet Mr. Nandan Nilekani and Salil Parekh. So, we keep talking about global partnerships, but Anthropic CEO, according to reports, is likely to meet Infosys. So that's the other tech stock you should keep on your radar. In any way, if there is, can strike a partnership to leverage India's tech talent, or anything comes out of this.
Well, indeed. So we'll keep an eye out on that as well. Well, Parag, you have liked the larger private sector banks. I think the last time around we spoke about ICICI Bank as well. What about a company like a bank like RBL Bank? There is that chatter that it could be some kind of infusion. Valuation-wise, well, it's not as cheap as what it was at the start of this year, but there was big fund-based buying yesterday, and the stock continues to remain in the F&O band. At around 285 rupees, your view on the stock?
So basically, I will refrain from giving a fundamental call on this company because I don't have it in my portfolio. But I just saw the business update, and business update looked very good, actually. From my analysis on the business update, I think this will be one of the banks apart from City Union Bank, which can report QOQ NIM expansion. So I would like to just give you my fundamental analytical view. Of course, many things are floating around in the market, and we have seen that there's a huge global interest in Indian financial companies, right? For example, Sumitomo Banking of Japan bought stake in Yes Bank. We saw that IHC bought a stake in Samman Capital. So this can be another episode like that also, in my view.
But what would you go for in the banking pack? You prefer the larger banks?
Yeah. So basically, see, I'll tell you, my view is very simple. I'm very bullish on second half onwards for the economy because of whatever steps government and RBI has taken. And banking is a leverage proxy to play the economy. So I am extremely positive, overweight stance on financials, led by HDFC Bank, ICICI Bank, SBI, and so on and so forth, and City Union Bank, as I keep saying. So I'm saying that HDFC Bank, for example, just to give you a glimpse, now trades at just 2 times book value on FY27 earnings. PE multiple is just 15, so PEG is 1. Plus, after this 22nd September, the festive-led demand surge and the GST cut-led demand surge, they are the biggest beneficiaries, actually. They lend to, auto Maruti, for example. For Maruti car buyers, HDFC Bank is the biggest lender. So they will benefit. I'm 100% sure in second half the credit growth will improve. Now they don't have constraint of CD ratio also. So the growth will accelerate. Margins will bottom out in Q2. From Q3, due to CRR cut and due to deposit repricing, gradually margins will improve and it will inch back to the normal margin levels by Q1 of next year. So I would say that 15% EPS growth is possible, and 15 is the PE. Price to book is 1.9. Price to book is 2x, and ROA is 1.9. Plus, it's the best leverage, most prudent leverage proxy to play economy. So ICICI Bank also same thing. They have always surprised the market on every metrics, and they will keep doing that. In my view, in terms of margins, also this quarter should be bottom again for them.
Yeah.
And both are very strong deposit franchises, with very low cost funds.
Yeah, no, absolutely. Parag, I had, so that's financials and IT, two big areas. And you said GST cut, etc. There's also perhaps, who knows, right? This US-India thing may also get resolved, H2.
Hoping. It's a big hope.
Yeah. Then you add many more segments to this thesis, things doing better, things doing well. I just had a question, Parag, on, so we spoke about some of the, if I can put it that way, older segments, but a lot of the interest is in new industries where there is a fast scale-up happening, right, which is data centers and AI and technology and all of that stuff, right? And it's real. I mean, it's not, it's not, it sometimes feels very floozy, but the point is, it is real, maybe ahead of its time or whatever. Sure. But it's playing out. And there are few names in the listed space as well. Have you done the work? Have you looked at the ecosystem? And does anything make sense here?
So basically, I am playing it. See, I want to play the first wave of any big theme through time-tested businesses. Because even if suppose that theme does not materialize, the current cash flows are justifying the current market caps. That is how I think, and that is why Reliance and L&T are my bets on this kind of themes. Both of them are putting data centers. Reliance is betting big on AI. L&T is betting big on green hydrogen, data center, semiconductor, and plus their current market caps are, for example, L&T trades at just 24 PE on FY27. And order book, I am 100% sure that they will meet their order inflow guidance. This quarter also execution should be good because of Middle East. Reliance also, for example, refining is doing okay. Retail, again, GST-led demand surge will help Reliance Retail also. In Jio, they are adding subscribers like nobody's business. Like last month, they added 18 lakh subscribers. ARPU is likely to inch up. So I'm saying that I'm playing this theme through time-tested businesses like Reliance and L&T.
And by the way, the interest in LG Electronics is very high. So yesterday, Tata Capital closed. It was a very large issue, the largest of 2025, 15,500 crore. And the total subscription for Tata Cap was 1.95. LG Electronics, 2 days are over of subscription, and they're raising about 11,600 crore. And we've already seen 3.3%, 3.3 times oversubscription. Parag, come in on LG Electronics. Are you advising? People who listen to you advise, are you telling them to participate in LG Electronics? You're on mute.
Yeah. So LG Electronics and Tata Capital both are sensible, rationally priced and decent companies. So definitely for anybody who refers to my advice, I would say you can subscribe to it.